All right. So then another trade we took here last Thursday, the February 10th, going kind of supplemental with that SPX trade we took. We also took QQQ 356 puts of the same mindset, right? Right here was when the news broke. Same thing as we talked about with the more aggressive than priced in potential monetary policy coming up over the next couple of months, right? Um, so of the same notion, I wanted to kind of hedge my exposure and get in both indices. Also with the mindset that if the sell-off was rallying off of increased hawkish potential monetary policy implements, the names in QQQ were going to get hit harder than the names in the S&P 500, with them being higher PE names, more tech-focused growth names versus SPX and the S&P 500, which also includes financials, right? So my worry was I wasn't going to get the same move potentially on SPX that I would on QQQ due to financials potentially getting some more strength into that with banks kind of benefiting off of the interest rate hikes. So I wanted to hedge my exposure, get into both indices. So here was your initial candle that we pointed out as well on SPX. Right after the news broke, we had this big knife. I entered these very similar fashion off the 8 EMA test, which perfectly overlaps here. We had VWAP and 8 EMA reject right here at around 1 o'clock. This is where we entered. And as you can see, I took the 356s for the same reason I took the 4450 puts on SPX. I was playing to that, that next fib level underside, assuming we got a break here of this 361 level. So again, as you can see, that broke pretty easily. We had one candle of, consolidation at it, but ultimately broke and then acted as resistance on the way down. Didn't get a single candle close above the 21 here the entire way down. So that was really strong kind of conviction for me to stay in this trade, right? I held on to these almost all the way into the close. Took my first trim out at around 165%, I believe. So regardless, if you're trimming half at plus 165%, the rest of the trade could go worthless and you're still going to be, in the green significantly. So we swung the runners the second half of the position into the next day. And as you can see, we pretty much opened up Friday very similarly to where we closed on Thursday. You can see we got this support right around this 356 level that I was playing to as we bounced into the close, but ultimately opened right at the close of Friday morning. We had one knife of, some quick buying pressure in the open. Ultimately, came right back down and rejected that, got back below the EMAs, rode this pretty much the entire way down. We might have trimmed some out as we got in the money here, left a quarter to run. And the quarter runners, as you can see, this tanked all the way into close. Really strong move. Went honestly two support levels below where I was playing to. So ultimately, I think like the 350, 352s, something farther out of the money probably would have had a better return. But the runners on these still ultimately went over 300% into the close. So we netted 355% on this trade cumulatively, taking half out at, 165, letting the runners go. But the runners, that last quarter position that we let go into the close went over 1,300% on this trade.
Yeah, I think the awesome part about, the way that you trade using the EMAs is that it allows these types of situations when a trend may like exceed your expectations. It allows you to capitalize on those and really turn them into, massive gainers, right? And so when you get into that trade, like we always say, there's three possibilities. Either whatever you planned out is going to happen, and you'll be right, or whatever you thought was going to happen doesn't happen, and you'll be wrong. Or the third option is, whatever you thought was going to happen, the trade wildly exceeds your expectations, goes much lower than you thought it could go if you're in puts, goes much higher than you thought it could go if you're in calls. And, those trades can be monumental trades for, your account growth, right? And so when you get those opportunities, you want to try and capitalize on them. The difficulty comes with, obviously, you want to manage your risk while you're in a trade. If you're up a decent amount, you want to start to take some off the table, secure some profits, right? And so how do you balance those two things? I think that one great way is to really have a framework around when you're going to enter and when you're going to exit, right? And so you obviously got the news, which helped you out in terms of identifying what side of the trade you wanted to take. But notice how after getting that news, you still waited for your entry rules to confirm. You still waited for that reject of the ADMA, as opposed to just saying, oh, the Fed is hawkish, I'm going to buy puts right now, right? You waited for that confirmation, and that allowed you to really capitalize on a trade that I'm sure exceeded your expectations. Like you said, you were looking for that 356. Winded up closing where? What is that, like 350? So you
Under.
got a massive,
Yeah,
yeah,
like
under 350.
348 I think we closed at.
Exactly, exactly. And so being able to capitalize on those moves, when it completely exceeds whatever you thought was going to happen, can be critical, right? It could be the difference between a green week and a red week, a green month and a red month, right? And so I would definitely say just work on having that framework around entries and exits, to allow you to capitalize in situations like this. But yeah, perfect, perfectly done.